Good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer Treasury Consulting, and today is 3rd January 2020. Today is our first video of 2020, and first of all, I would like to wish Happy New Year to all of you. On behalf of Treasury Consulting, we wish you all the very best for this new year, and I hope that in this new year you work really very well. You and your family members achieved a lot of good and prosperous results during 2020. But giving my blessings and my good wishes might not turn true because yesterday we got two different news. Number one, which is Bosch India Automobile, basically Bosch India, a company worldwide, a multinational concern who makes very good automobile products and ancillary products. They decided to fire not less than 2,000 people from their Indian setup. And well, from 2019, everyone in the automobile sector or every analyst who is connecting with the automobile sector except the government is continuously saying that automobile sector in India is moving towards a crash. In fact, the highest body of the automobile sector said that maybe several thousand jobs will cut not only in 2019 but 2020 and subsequently if the drastic measure like GST cut and all these is not taken care of. So this is first news. Second news, which I don't know how you say this, but it is a very good news for one corporate, which is Reliance Industries, who continue to grow in India. You know the reason. And another corporate not for another corporate, just like Paytm, to an extent Google Pay and all. Jio wanted to enter into two segments. Number one, they are entering into e-commerce. As Jio is entering into e-commerce, it would end up a big war between Jio and Amazon. That's for sure. And one thing which I'm definitely sure about is that Amazon will not quit India. Because Amazon is having a very strong and profitable parent, which is US based multinational concern. And e-commerce is not the only business of Amazon. Amazon have multiple business streams like Amazon Web Services. And majority of their business streams are not only profitable but generating a good contribution in the bottom line, also known as profit after tax for Amazon. So even if Amazon India will continue to face losses probably for another decade, I assume Amazon India will continue to stay in the picture. So I am very confident as far as Amazon is concerned. But one thing which I am not confident in 2020 is that the war which is going to get triggered between Jio e-commerce, which is they titled India Ki Nai Dukaan. You know, they more or less copied the line from Amazon, because Amazon used to say that Apni Dukaan, you know. Anyways, this is having some intellectual property issue or not, I don't know, but Amazon will decide. Jio war with Amazon will make few people not only helpless, but they make them bankrupt, just like the telecom war. In this telecom war also, Jio was facing only two people, which is Airtel and Vodafone. Eventually three, Airtel, Vodafone and Idea. But what happened that over the period of the time, Idea merged with Vodafone, and that was the biggest mistake Vodafone did. And I think today Vodafone is paying the price only because of this mistake. Similarly, in this deal also, Jio is fighting with two or three players. Number one is definitely Amazon. Number two is the Flipkart, I would say Walmart. And third is just like Myntra and all these kind of small boys. What I see is that since all in case of telecom war, like eventually when Jio started, there were several small telecom players who were having small circles in India. So example, a small telecom player managing Lucknow, small telecom player managing some south part like Andhra and all, small players actually. They're making small money, they are happy, So Jio war just vanished them, and today nobody knows where they are, to be honest. Similarly, in this e-commerce war, I'm damn sure that Quicker, Mayantra, I would say all Lenskart, all these will go away. Because one thing I'm sure is that Mr. Mukesh Ambani will not restrict himself towards groceries. In the e-commerce, Mr. Ambani will definitely have all items apart from the airplane, because Amazon also not selling the airplane. Apart from airplane, Mr. Ambani would definitely have all the items which Amazon keep. And eventually in 2 to 3 years, this would trigger a war between Jio and Amazon. And ultimately one company which would wind up is the Flipkart. And then Walmart will realize the biggest mistake of his life by buying a company by paying over $16+ billion. The company who was in the losses since inception, and even today after acquisition it is in losses. So 2020 will definitely be a year of volatility like we predicted in 2019. But few people do not like that. Who cares? I don't care, because reality is definitely a reality. If today I started saying that things are very rosy, but they're not. Another thing that disturbs me is that Jio is entering up as a mutual fund platform. And I don't think that Mr. Ambani will restrict that platform to a mutual fund. The reason of the matter is that Mr. Ambani is the kind of person who visualizes 20 years down the line. Standing in 2020, Mr. Ambani see how the things would be in 2040. That is a good part of him which I always appreciate, even though I might have some interpretation issue about Reliance Industries Limited and its valuation. But this is good part of Mr. Ambani which I appreciate in public domain. But one thing which I see from his ability, that eventually Mr. Ambani would have all the products in his kitty, which would be insurance policies, which could be all kind of financial product, including SIPs, systematic investment plan, and God knows what is going in the mind of Mr. Ambani. But I'm sure the kind of person he's up to, he would have everything in the basket, in the one kitty. Now there are 3 different things now we have at the beginning of 2020. In fact, 2 days passed, which is 2nd January. Now today is the 3rd January 2020. Now one is that the automobile sector has started firing people. In fact, they fired in 2019 also. So when it comes to firing, 2019 was definitely not an exception for automobile sector, and 2020 no one envisaged that they will fire on a second day of 2020, but they started 20 with a note that 20 would definitely not be a good year for many companies, and definitely automobile sector is one of them. Second is the Jio entry in the e-commerce space, currently limited to the few parts of the Mumbai, but considering we know Reliance Industries Limited leadership, they would definitely take up to the pan India. It would definitely trigger a war between Jio and Amazon. How Amazon will react, we need to see, but definitely Amazon will continue to be in the picture. But one thing we really need to see, how Flipkart, Myntra, Quicker and all these players will survive. I think they would wipe out. But one thing that disturbs me most, and I wanted to connect you, is the VC funding. Because it looks like it's a completely different topic, but it is not. So we got a data in the media, and it suggests that the unicorns of 2020, I don't know who called them unicorn. By the way, I hope you would have heard that SoftBank got another blow. And another blow is that one of the well-known chairperson of a well-known company quitted the board of the SoftBank. It is similar, I would say, Control C and Control V, like Travis, who is a co-founder of Uber, quitted and sold around all stake, whatever, not left even with one share in the Uber. And for your information, Uber share price is currently trading of 50% of what it was listed. So only an Einstein, those who bought or invested in Uber at $48 would wait by the time it will come out to be 48, but I doubt in his lifetime it will come out to be 48. So there are 5 unicorns which our media is saying, which is the Dream 11, whether they are profit or loss, Lenskart, Delivery, Druva and Ola Electric. Majority of these are not in profits and they are losing one by one. But I have some important data which I wanted to highlight in the venture capitalist space. And I wanted to link these three things together. It suggests that the report also threw light on the region specific trends. For instance, Mumbai and Bangalore lost market share in the last 3 years compared to 2014 and 16. The number of startups founded in Bangalore and Mumbai in terms of market share fell 23 and 16% between 2014 and 16 to 21 and 13%. It means that in 2000, between 2014 to 16 and 17 to 19, the total volume, the total count of the startups being incorporated in Mumbai and Bangalore, they are falling. But many political parties believe that, or many so-called economists, especially Uday Kotak and all, believes that India can be a $5 trillion economy. How? I don't know. To be honest, I don't know. On the other hand, Delhi also saw a declining, and so as the another state. So on one side, the venture capitalist story is shrinking, just like glaciers. SoftBank is facing blow after blow on everyday basis. The big investors are not funding. The unpublished statement by one of the top VCs suggests that they are not interested to invest in the companies, those who are looking for regular funding. Because they clearly said to corporate that come with a profitable business model, else go. As simple as that. More importantly, what also is happening is that people feel that the grocers like Big Basket and all, they can be profitable. And they are in a huge loss, by the way. We know that. So one side is that the startup funding is declining and it is shrinking just like glaciers. But you must be thinking why we are talking about the startup funding. There is a reason. Now keep this, which is startup funding, at one place, and remember that SoftBank is in crisis. Funding is coming less. Even Paytm, Ola, Uber, Zomato, Swiggy, Lenskart, Oyo, all the great Bhavesh and Nitesh Agarwal, they are firing people. Remember that. They are firing people. Now let's come to this part, which is Jio, and I would like to specifically read about one important thing about Jio. It suggests that a chief executive at the mutual fund who declined to name said that the formal discussions have not been held with Reliance Jio so far, but it has obtained an account aggregator license from Reserve Bank. You know that obtaining a license from Reliance is nothing. If they decide, they got a license by default. Account aggregator are entitled to collect and share financial information with third parties after getting user assent. Do anyone worry about user assent in India? Can you even ask any mutual fund where they are using your PAN number? And why I am asking question? I myself, my company invested in the top 10 mutual fund of India. We are a cash rich company. Can I ask any mutual fund that where is my data? How you are using my data? Do I have the privilege to ask this in India? So mentioning that getting user assent is a waste of time. Because no one worries about user assent in India, to be honest. When you take a mobile phone and he give you a PAN card, Aadhaar card, or maybe any other voter ID card, do you know where it is being used and how many times it is going to get used? Do anyone even bother to give you a call that I'm using your data? No one. But anyways, the big thing is India mutual fund industry is 20 million unique investors, approximately 1.6%. And it is around 27 trillion INR, which is 27 lakh crores. A number of online platforms such as Scriptbox, Kubera and Grow. Hold on. Visit our YouTube and see that on time to time basis we have warned that the digital wealth management is going to get flop. You can check on our YouTube channel. In the last 3 to 4 months, these platforms got a substantial money from the venture capitalists. That is something which is making me disturbed. But more disturbing part is coming, which is large well-funded group such as Paytm and Times Group have entered the fray with the apps such as Paytm Money, ET Money and respective. In fact, it is said that Paytm Money recently tweeted that it had contributed to 20% of the retail participation in the recently concluded Bharat ETF. You got my point? Venture capitalists are shrinking. Reliance is entering into the mutual fund platform. And considering the visionary management they have, especially Mr. Ambani, they would surely enter with covering all products, insurance and non-insurance, all products. Having said that, Paytm, which is already into huge losses, and last year they reported a loss of around 3,900 crores, which is approximately 4,000 crores, they would face a substantial war between Jio and Paytm. And don't forget that in the basic business, which is the wallet business of Paytm, they are already at number 3. Google Pay is number 1, followed by PhonePe, and of course followed by the Paytm. Once again, the position of the Google Pay in this wallet business is just like we have the position of Amazon in e-commerce in India. Google Pay can sustain in losses for another 20 years in India because they are a well-funded company and they have a huge revenue stream which is coming from another parts, and they are a 100% profitable company on a consolidation node. So having said that, just use your mind and connect two dots. Third dot is yet to come, which is that if VC will crash, and which they are, by the way, that is a reality, that then with the Jio entrance in the mutual fund and the financial products, it would make Paytm and everyone crash. The smaller wealth management platform, just like Cred Wealth, just like the Scriptbox, Cuvera and Grow, they would vanish because they don't have the firepower to withstand before the Jio. So Jio entry into the mutual fund business is a big USP for 2020, and take my words, on the 3rd January at 2 a.m. in the morning, that this is going to have a substantial catastrophic impact on a venture capitalist space in India. All those venture capitalists, those who idiotically funded the digital wealth management platform, will face the heat and they lose their money 100% very soon. When I look at the third thing, I got to know that NBFC, renewables and reality may slip into distress in the next 5 years. First of all, I would like to congratulate this author that the first time I have saw that he is talking the right stuff. According to the report, that the asset liability mismatch would, and the major default by the shadow banks would crash. In fact, few days before on the Bloomberg, without quoting the name of the person, one person came from US and he clearly said that Indian equity markets are not only highly overvalued, but he clearly said that the shadow bank collapse in India is imminent. And I hats off to him that I am in complete sync that Indian equity markets are highly overvalued. In fact, the ex-chief economic advisor, as also who lives in US now, said that in his speeches to IIM Ahmedabad that I don't understand that one side the economy is dragging into the fall, like GDP is falling, all indicators are falling, and the equity markets are going up. He even gave a statement that if anyone can make me understand that all the economic indicators are falling while the Sensex is going up, how come that possible? I will come down to India and try and understand. I am with him that this is the 8th wonder for me in the globe, that how come the GDP and all fundamental indicators are falling down while the equity markets are going up. Well, having said that, the one good thing with the history is that no scandal in the world kept unearthed. Every scandal came into the public domain. Every scandal, Nirav Modi scandal, every Renault scandal, Nishan, and everyone came in the public domain. I'm sure in a year or so this scandal will also come in the public domain, that when the economic indicators were falling, why were the GDP, why were the equity figures were going up? Anyways, I got some data which suggests that the non-performing asset of NBFC increased to 6.6% in the fiscal year 31st March from 5.8% in the previous year. Non-performing assets are growing. Having said that, non-banking financial corporation has reached to a level when they are knocking the door of the foreign funds and they need the money desperately. Like recently, many non-banking financial corporations raised money from outside India, and a news came that around 47 corporates raised around 21 some billion dollars outside India is a 6-year high figure. If I link all the three news, I am getting a feeling or a forecast that the basic source of money, which is the VC money, is drying up slowly. Every passing day, SoftBank is facing the negative issue. Henceforth, SoftBank is definitely not in a position to give a huge checks versus they were few years ago. With the entry of Jio, it would be very tough for people like Paytm to fight as far as the app money is concerned, as far as the mutual, as far as the financial market platforms are concerned. Having said that, the Jio entry into the e-commerce would definitely have trigger a war between Jio and Amazon, and we need to see how this war would eventually end up. But one thing I'm sure, just like Amazon position in e-commerce, Google will continue to be in the payment gateway system in India. That's for sure. This would be a very difficult year for Paytm, and I will not be surprised if Vijay Shekhar Sharma in 2020 will quit from a Paytm board. Because one thing which I'm sure that in 2020 Paytm will report higher loss versus the last year loss. And this year loss would be more wider because of the Reliance Jio and the e-commerce war between that. Don't forget that Paytm also have Paytm Mall, and Paytm Mall is in substantial losses. And remember that the e-commerce war which is going to be triggered by Reliance Jio, it would definitely have an impact on the Paytm Mall also. Paytm left with only two options. Either they shut down Paytm Mall, or if any big VC will come and fund $2 to $3 billion, then okay. But I doubt who will fund them. It would be very interesting war of 2020. The last Reliance entry into the financial product and a mutual fund platform would trigger a wave of digitization. Till what extent the small people like Quicker, just like Myntra and all these, just like Reliance, just like Paytm apps and all these will stay in the game, I don't know. More importantly, Policy Bazaar, Bank Bazaar, till what extent these players can come into the picture, even I don't know. Hey guys, did you know that? Did you notice that the Policy Bazaar and the Bank Bazaar are they not giving much advertisement in the media nowadays? Did you notice that? Did you notice that majority of, in fact, Paytm advertisement in the public domain is falling? Did you notice that? In 2017, every day when I used to read newspaper, I used to find out that heavy advertisement by Paytm, and now I'm finding that really Paytm do advertise in the media. Just think over it. Eventually, to conclude the discussion, 2020 is starting up with a very good note, a disruptive note, a volatile note. Job losses would continue, disruption would happen, Reliance will continue to scale the new heights. We know a lot of reasons apart from their competence. With due respect, venture capitalists will fall down in India, and digital wealth management investment by the venture capitalists would wipe out 100%, and credit has to go to Reliance Jio entry. With this, we thank you very much. You know my mobile number, which is +91 9899242978. You know our fixed income platform, www.fixedincome.global. But before closing, we have two good news for you. Number one, Treasury Consulting filed for banking license in Singapore. We are going ahead for a digital banking license in Singapore. And apart from them, we are starting the talks with Bank of England on Monday. which is 2 to 3 days from now, and we are looking for a banking license in England and in London. Second good news is that Treasury Consulting started designing the audiobooks. We are launching a full-fledged e-commerce portal wherein you can buy anything pertaining to financial markets. We once again reiterate that unlike Geo and another players, we don't sell mutual fund and neither expect us to buy or sell mutual fund. We would be selling a lot of derivative instrument. Like today, if you open amazon.com, 8 plus derivative instruments are live, and by end of June it would be 100 plus. That's my surety. And before we leave for Singapore FinTech Festival, which is 9th November 2020, we would have the best e-commerce platform covering everything about the financial markets. We thank you very much to the Lord who is in the sky for giving us a vision, and we assure you that the 2020 will definitely be a year of volatility. It would be a year of big action, and Treasury Consulting will not act as an audience, rather it would act as an umpire. That's our assurity. With this, we thank you very much, and we also would like to give you a good news that next video we are starting our journey of arbitration. Treasury Consulting launching arbitration related videos on YouTube channel, wherein we would be covering international arbitration issues, how the arbitrator should react, and multiple issues pertaining to arbitration. Of course, arbitration is an interpretation based judgment. That would be our interpretation. With this, we thank you very much. Have a great site, and don't forget to follow us on the TikTok. My user ID as usual, very simple, @Rahul Magan 8. Or if you open the TikTok, type Rahul Magan, you will see me. We on the verge of crossing 800 videos on TikTok. Have a great time and talk soon.